Just a few months ago, Palm Jumeirah was still the kind of place where you could hardly find an empty seat, a living symbol of luxury, where crowds kept flowing in non-stop, money circulated continuously, and the lights seemed to have no concept of ever turning off. But then, what has been appearing recently has made many people pause.
Dubai's luxury skyline was rocked overnight after missiles reportedly struck near Palm Jumeirah, sending thick plumes of smoke into the air.
Now Palm Jumeirah has a different face. Rows of empty sunbeds where you can sit anywhere you want. Luxury resorts, offering deep discounts, almost like giveaways, and even pets being left behind as some owners rush to leave. What is really going on? The answer may not be as simple as what you're seeing. Let's keep watching. By late February 2026, long-standing tensions between Iran and the US, Israel alliance appeared to escalate in a way few had anticipated. Iran was reportedly launching waves of drones and missiles toward Gulf countries, including the UAE, seemingly in response to earlier strikes on its facilities. U.S. allies in the region, including the UAE, were forced to activate air defense systems continuously. Most of the drones and missiles were intercepted, but debris still fell into residential areas and key locations, causing those who once believed that a place like Dubai is always safe to reconsider the level of risk. A notable moment occurred on the 28th of February 2026, when a drone or debris from an interception fell near the Fairmont The Palm Hotel on Palm Jumeirah. The incident caused a small fire, shattered windows in nearby buildings, and according to official reports, left 4 people injured. Fairmont The Palm has long been a symbol of luxury, attracting wealthy tourists and high-end residents, representing a model of upscale and secure living. But now, this event seems to have disrupted that sense of calm, at least in the eyes of the international community watching closely. Images of dark smoke rising from Palm Jumeirah, along with videos capturing the sound of explosions, quickly spread across social media and major news platforms. The Palm, once seen as a safe paradise, suddenly appeared to represent unpredictable risk. It seems that even those considering travel plans or real estate investments in Dubai had to pause and rethink their decisions. Temporary restrictions on airspace corridors and operations at Dubai International Airport only added to these concerns. The reaction from residents and tourists was not surprising. Many immediately canceled hotel bookings, changed their itineraries, or looked for ways to leave Dubai earlier than planned. Within the expat community, where many families have lived for years, this incident appeared to challenge the sense of security they once took for granted. There may have been nights when people looked out at Palm Jumeirah from a distance and wondered whether this place was still truly stable, or simply a luxury project vulnerable to geopolitical tensions beyond their control. Palm Jumeirah, once promoted as a symbol of luxury and safety in a volatile region, now seems to stand as a reminder of underlying risks, even in places thought to be immune. When a drone or piece of debris lands near where you live, even without causing major damage, the feeling of long-term stability is often the first thing to be shaken, and that forces residents, tourists, and investors to reassess the level of risk associated with the island, and perhaps Dubai as a whole. If you're interested in breaking down stories like this, where luxury, geopolitics, and market psychology intersect, make sure to subscribe to the channel so you don't miss the next analysis. It seems that Palm Jumeirah has never witnessed a level of emptiness quite like this. Hotels that were once constantly fully booked are now struggling with occupancy dropping below 20%, according to reports from Gulf News and Khaleej Times in March 2026. It appears that tourists once accustomed to planning luxury getaways have hesitated, postponed, or canceled their trips to avoid potential risks, forcing many resorts to temporarily suspend services such as restaurants, spas, and beach clubs. This may be the first time in the island's history that its high-end, premium amenities are facing such a surprising lack of visitors. Not only accommodation, but international travel also seems to be bending under the impact of these events. Many flights from Europe and the United States to Dubai have been canceled or rerouted due to temporary airspace restrictions and disruptions at Dubai International Airport, DXB. Major airlines such as Emirates and Etihad have announced the suspension of certain routes, and this appears to add to the sense of isolation around Palm Jumeirah, making high-end tourists and foreign families reconsider the risks of choosing it as a vacation destination. The most significant impact, however, seems to fall on the wealthy resident community. A wave of temporary relocation among high-end expats has been observed, especially among villa owners on the island's fronds and luxury apartment residents on the trunk. Many have chosen to temporarily move to Saudi Arabia, Qatar, or return to the United States and Europe, seemingly in search of a greater sense of safety. The main trigger appears to be the drone and debris incident near Fairmont the Palm, which disrupted the long-standing perception of a protective barrier surrounding the island's luxury lifestyle. Perhaps for the first time, high-end expats are realizing that villas, premium amenities, and expensive resorts are not entirely immune to geopolitical events, a reality that may prompt many to reconsider long-term living decisions here. The sense of uncertainty does not seem to be just a temporary reaction. Many market experts suggest that some high-net-worth residents may begin reassessing their long-term investment and residency plans in Dubai. According to Reuters and Bloomberg, long-term investors appear to be in a wait-and-see mode before deciding to purchase or lease additional properties on Palm Jumeirah. It seems that even though the event lasted only a few days, it has become a reminder that even heavily marketed luxury havens can become unstable when geopolitical factors suddenly show up with unexpected impact. Enjoy this video so far. Stay tuned, as there's still a lot that we need to discover. Interestingly, despite Palm Jumeirah going through a period of reduced activity and fewer residents and tourists, ultra-luxury villas on the fronds continue to maintain extremely high prices. The reason appears to be clear scarcity. Each frond has a limited number of villas, which seems to make this ultra-luxury segment temporarily resistant to short-term fluctuations. Bloomberg reports even highlight that some villas are still being listed at record prices, despite the quiet surroundings. In contrast, mid-range apartments on the trunk do not seem to share the same resilience. Many owners are being forced to reduce sale prices or rental rates to attract buyers and tenants, amid a temporary outflow of residents and a significant decline in international tourists. According to Gulf News and Khaleej Times, occupancy rates for these apartments are currently around 30–40%, far below pre-tension levels. It appears that security concerns, combined with the expat outflow, are pushing this segment into a challenging temporary phase. The divergence between ultra-luxury villas and mid-range apartments highlights an interesting paradox. Palm Jumeirah continues to retain its luxury value and reputation, yet actual cash flow and resident participation appear highly sensitive to international instability. Reuters has quoted real estate brokers noting that in high-end markets, it is normal for long-term value to remain intact, while short-term liquidity is affected during geopolitical fluctuations. Palm Jumeirah may still stand as a symbol of luxury, but the sense of security it once offered can be shaken much more easily than expected sometimes, in just a matter of days. Looking at the long-term outlook, real estate experts believe that once geopolitical conditions stabilize, the trunk segment may recover, while the fronds are likely to continue maintaining record prices due to their scarcity and brand prestige. This situation may also serve as a subtle reminder for wealthy investors. Even a luxury paradise like Palm Jumeirah is not entirely immune to global disruptions, and carefully evaluating risk before committing to real estate investments remains essential. In a way, this event reflects both the sensitivity of high-end markets and a quiet but meaningful reminder of how valuable the feeling of security truly is. And if you find these kinds of deep dives, don't forget to subscribe to the channel so you don't miss the next story that might look perfect on the surface, but has much more going on underneath. All it takes is a few short videos on TikTok or X, and Palm Jumeirah, once promoted as a non-stop symbol of luxury, suddenly appears unusually quiet. Beaches look nearly empty, restaurants lack their familiar buzz, and Nakheel Mall, once considered a major commercial highlight, seems to move at a much slower pace than expected. Of course, if you look more closely, it's not hard to notice that these angles are often selected quite carefully off-peak hours, less crowded areas, or transitional moments during the day. But in an era where a 5-second video can shape the perception of millions, the feeling of a ghost town seems to spread faster than any report. Even outlets like Reuters and Gulf News have noted a clear short-term drop in foot traffic, and from there, the narrative begins to write itself. From scattered images to a shared sense that something is no longer the same. And then, the market reacts in a way that may feel familiar to anyone who has lived through a few cycles. Not panic, but not rushing either. Experts call it wait and watch, a phrase that sounds calm, but carries a fair amount of caution underneath. Buyers delay decisions, renters reconsider contracts, and those on the sidelines seem to choose to stay on the sidelines a bit longer. According to Bloomberg, transactions in the mid-range segment have started to slow, while new buyers are asking for more flexible terms. Interestingly, in the ultra-luxury segment, capital still appears to be moving. Perhaps for those accustomed to investing tens of millions of dollars, short-term fluctuations are not always the deciding factor. This creates a rather unique picture. The lower end of the market slows down, while the very top seems to maintain its pace. A kind of divergence that, from a distance, might make people wonder who is actually worried and who isn't. On the consumer side, the impact appears more visible. Foot traffic at restaurants, clubs, and shopping centers has declined, at least in the short term. The high-end tourism sector, typically very sensitive to perceptions of safety, seems to react quickly. Some travelers postpone their trips, while others shift to destinations that feel more secure. This doesn't necessarily indicate a long-term trend, but it highlights something quite familiar. When given a choice, people tend to choose certainty, even if it's only a feeling. Infrastructure projects and upgrades on Palm Jumeirah, however, appear to be continuing. There have been no major announcements about halting or delaying key developments. This suggests a fairly clear message, even if not stated directly. Those operating the system still seem to believe this is a temporary phase. And when looking back at Dubai's history from past challenging periods to how it has maintained development momentum, that confidence may not be without basis. This is where an interesting separation begins to emerge, between short-term imagery and long-term fundamentals. On one side are the fast-spreading empty videos. On the other are reports from Knight Frank and other organizations showing that Dubai's high-end real estate market has continued to grow strongly in recent years. These two pictures are not necessarily contradictory, but they create a gap, and it is that gap that makes people pause and think. Perhaps the most important factor lies in geopolitics, something that, while not directly visible in each apartment or beach, can influence how risk is perceived. The Financial Times has noted that global financial and tourism hubs often feel the ripple effects of regional tensions, even when they are not the direct focal point. And for global investors, boundaries are not always defined by a single city, but often by an entire region. That may explain why market reactions are sometimes more psychological than based on internal factors. When the sense of safety is questioned, even temporarily, behavior tends to shift. It doesn't take a major event, sometimes just enough to make people slow down. From an investment perspective, this creates two clear extremes. Short-term players seem to prioritize liquidity and the ability to exit quickly, a strategy that feels familiar in any market with uncertainty. Meanwhile, long-term investors may see opportunity if they believe these fluctuations are temporary. And between these two groups, developers are forced to balance, maintaining the image of luxury while reinforcing confidence that stability is still there. So perhaps the image of a ghost town is not really a conclusion, but more of a test. A test of how the market reacts, how investors think, and perhaps most importantly, how people perceive risk in a world where everything can change very quickly. In this case, Palm Jumeirah seems to be more than just a location. It acts as a mirror, reflecting the mindset of a global class. Responsive, flexible, and always willing to wait a little longer, just to be sure the next move is made at the right time. Things didn't end there, so keep watching. Palm Jumeirah has long been seen as a playground for the international wealthy, entrepreneurs, investors, and high-income remote workers. But according to reports from Knight Frank and Bloomberg, a significant portion of them may not be residents in the traditional sense. They resemble global citizens, more people who might live in Dubai during the winter, Europe in the summer, and perhaps North America at other times of the year. It sounds appealing, but it also raises an interesting question. If everyone can leave at any time, is anyone truly staying? Then, when signs of instability appear, the response seems to happen very quickly, perhaps much faster than what is typically seen in more stable communities. According to Reuters, during periods of regional tension, short-term demand to leave the UAE tends to increase, especially among international residents. This doesn't necessarily mean they are leaving permanently. It appears more like a familiar strategy. Temporarily step back, observe, then return when things seem more stable. A kind of exit flexibility, financially rational, but one that makes the idea of attachment feel quite flexible. Some stories mentioned in the media, such as residents leaving in a hurry, abandoning assets, even pets, while possibly isolated cases, carry a fairly strong symbolic meaning. They suggest that behind the glamorous surface, the sense of attachment may not be as deep as many once assumed. When a place is built as a paradise of convenience, it may also become a place people can leave without looking back for too long. This becomes even clearer when looking at the market structure. According to Gulf News, the short and mid-term rental market in Dubai has grown significantly in recent years. That seems to reinforce a reality. Palm Jumeirah may be operating more like a lifestyle hub than a traditional residential community. And for those used to the idea of a neighborhood where neighbors know each other, where value lies not only in the property but also in the relationships around it, this model might feel somewhat unfamiliar. A high-end real estate market typically relies on a stable resident base to sustain long-term value. But if most residents are present only by the month, by the season, or based on personal financial cycles, that sense of stability becomes harder to define. Bloomberg and the Financial Times have noted that markets heavily dependent on international capital tend to react sensitively to global fluctuations. This doesn't mean value disappears, but it may fluctuate in ways not everyone finds comfortable. And this is perhaps the most thought-provoking point: the difference between asset value and community value. Palm Jumeirah, with its iconic design and unique location, seems to retain strong appeal as an asset. But community value, the element that creates stability, trust, and long-term attachment, appears to be a different story. Urban experts often emphasize that a sustainable city is built not only with concrete and capital, but also with the commitment of the people who live there. And if that commitment lasts only a few months each year, the overall picture may look quite different. Looking more broadly, Palm Jumeirah seems to represent a very modern development model, driven by global capital and a highly mobile class of residents. When conditions are favorable, this model can generate rapid growth, strong branding, and impressive pricing. But when volatility appears, that same flexibility can cause the market to react faster, and sometimes more sharply than expected. So perhaps the takeaway is not whether Palm Jumeirah is doing fine or not. Instead, it may lie in a deeper question. How luxurious can a place truly be if the people living there are always ready to leave? And for those accustomed to the idea of a home built over decades, that question may feel both intriguing and slightly familiar in its skepticism. Perhaps Palm Jumeirah is not truly empty in a physical sense, but rather going through a rare moment where the layers of glamour temporarily step aside, revealing how a global market responds to risk. The villas are still there, developments continue, and its symbolic value does not seem to have disappeared. At the same time, however, the slowdown in foot traffic, investment decisions, and overall confidence tells a different story, one that is more subtle, but perhaps more grounded in reality. In a world where capital and people can move faster than ever, the question may no longer be how luxurious a place is, but how long the attachment of those who choose to live there actually lasts. And at this moment, Palm Jumeirah seems to be an interesting test of that very model. When everything goes well, it shines, but when volatility appears, what stays and what leaves? So, instead of rushing to conclude whether this $12 billion island is declining or simply cooling off, perhaps the more important question is how each of us interprets the images and data in front of us. Do you see this as a warning sign, or just a short-term reaction from a market that has always been sensitive to global shifts? Share your perspective in the comments below. Before you go, please note that this video is compiled from various public information sources and independent analyses, aiming to provide a multidimensional perspective on tourism and the economy. Not intended to attack any country, organization, or individual. Some observations are analytical and may change over time. Thank you for watching until the end. Don't forget to subscribe, and see you in the next videos.